Welcome, investors. Thank you so much for joining me here at Gambling Investor. Today, we're going to be talking about the position I just opened in my investing portfolio, SOFI Technologies. So let's jump in, but a quick little disclaimer. I'm not a financial advisor, nor am I a gambling advisor. Do your own diligence. All right, so if you saw on one of my previous videos that I just posted last week, I did start a position in Elf Beauty. And I just want to show you, this is about a $3.5 billion dollar market cap. So pretty, very, very small. And you can see I'm already up huge. This is very common with these small cap companies. They can move quickly. So sometimes you got to take, advantage while you can. And I did with 10 shares. I'm still looking to buy more at under 60 bucks. It's definitely a buy for me. So hopefully I can get some more funds in here soon and maybe buy a couple more shares. So SOFI Technologies, we can see I bought 30 shares, have a cost basis of about $16. It's almost 3% of the account. And yeah, a market value of almost $500. So the smallest position in my investing portfolio. So Anthony Noto, the CEO of SOFI, just did an interview at Basis Points. Amit and Steve have a new podcast, YouTube channel, whatever you want to call it, Basis Points, where they're doing about, I think, once a week show. It's been for 3 months. So they've had Vlad, the CEO of Robinhood, on here as well. So this is a little clip of Anthony Noto talking
because of the moratorium. What do you have to say to the people that are looking at the dislocation in the stock price and the execution of the company that see you making these open market purchases and are wondering, why does the market not really get the SOFI story right now?
Yeah, I think we're in a period where people have re-rated the multiple on fintechs generally. And if you're a fintech that's exposed to credit or exposed to interest rates, that re-rating has been even more severe, regardless of the other revenue streams that you have. On a trailing 12-month basis, our net revenue is about 50% lending and 50% non-lending. If you look at it on a cash basis, which we reported net interest income.
All right, so let's talk about that really quickly. I have this chart comparing SOFI to Robinhood, right? So he said fintechs are being re-rated, especially the ones in particular exposed to credit, which SOFI is exposed to credit. Robinhood is not. So they're not a nationally chartered bank. They do offer services, but they're not providing the services. They're just the platform that you engage with in those services. So if we see here, Robinhood has a $68 billion market cap. SOFI has a $20 billion market cap. Now, SOFI is trading at about 50% from its highs, I don't know, a couple months, 3, 4, 5, 6 months ago. So at one point, very recently, this was trading at a $40 billion market cap, way closer to Robinhood. So if we look at some of the similarities, we can see their price to earnings are almost identical. The revenue, the money they're bringing in, very, very similar. Their forward PE, Robinhood's trading at a higher forward PE. Obviously, SOFI has been re-rated and is not getting the credit, basically, would be probably the easiest way to explain it. If we look at the revenue growth on par, gross profit, very, very similar. So price to sales. So here's one that SOFI is obviously, looking better at 5. So their price compared to how much revenue they're bringing in is at a 5, where Robinhood's at 14. So when it was trading at double the price, it was closer, but still SOFI would be the better deal on that ratio. Price to book. And this is what Anthony Noto goes into on this interview on, saying we had a 4 or 5 price to book. Now they're only giving us credit at 2. And why are they giving us credit 2? Because of the interest rates, because of their credit exposure. So I think this is going to change, and I think it's going to probably change in pretty soon. So if we look at SOFI, all the things that they offer on their platform, if you go to their app, which is where you're going to engage, they don't have physical locations. You can pull money out very easily. They have locations. I do use SOFI as my main bank right now. Very, very easy to find locations. I mean, all over the place, in 7-Elevens, in CVS or Walmart, or not Walmart, actually, yeah, Walmart's, Targets. Found them at Walgreens is what I'm thinking of. you can go in there and quickly get money out. Now, putting money in, that's the issue I've had. I haven't been able to find a place. They won't charge me a fee to put money in. Now, I haven't searched too many places, and I know there's not too many people trying to put money in compared to, people pulling money out. So banking, they obviously offer checking, savings, credit cards, debit cards, investing. You can buy stocks on this platform. So you have everything in one spot, right? Your checking, your savings. Then you can purchase stocks. You can purchase loans, car loans, home loans, business loans, personal loans. And then just as of, I think within the past year, you can hold crypto in there. Not as extensive crypto holdings as you would find on like Robinhood, but to be honest, I don't want to hold a bunch of different crypto. There's just a few cryptos that I'm interested in purchasing, and they have all of those on there. So they are trying to build their brand. They want to become a household name. I've seen Anthony Noto talk about it several times. And we can see this in the branding. They have a SoFi Stadium in LA where the Chargers and the Rams play. Huge, huge market. Everybody knows the NFL. And NFL, if you don't know, is growing. They're trying to expand into the UK. They've got different games in, around the world. And every year it's increasing. I think last year it was maybe 2 or 3. I think this year I'll be 5 or 6. I'm not positive on that, but I know they are trying to expand, throughout the world to not just be in the US. So let's move to their rule of 40. This is a metric that people like to use for like software companies, right? Companies that are growing very, very fast, which SoFi is. They are a bank, but they kind of trade like a fintech, meaning they're just growing so fast. So a good rule of 40 would be 40, meaning they're growing 20% on the top, at least, and 20% on the bottom, which SoFi is. So in their last quarter, I think they came in at 72, if we see right here. So yeah, doing pretty good. I actually think this number is going to actually go up. I can see this going up in the next, year or so above 80, but who knows? We'll see. Durable growth. Let's look at their earnings per share. This year, they are projected to do 60%. Huge compared to 40. So like a whole 50% from last year's earnings. And you can see they've projected out here to, they've skipped 2027, but to 28. So they're looking to almost double in 2 years their bottom line growth, their earnings per share. Massive, massive, massive. So yeah. So let's talk about where they're going. So crypto is launched. SoFi Pay is using blockchain technology to make payments faster, seamless, cheaper, and safer. So it looks like it's available for members to send to over 30 countries. I haven't used the product. I don't need to use the product, but if you did, it looks like SoFi Pay would be a great tool to use. SoFi USD. So SoFi became the first nationally chartered bank to issue a stablecoin on a public permissionless blockchain. SoFi USD will be backed by cash at the Fed. So basically, it's the only chartered bank that is offering crypto. And why this matters is it's backed by the Fed. It's giving it trust, right? People can, they trust it more than they do some of these cryptos. If you've been paying attention to crypto, there's been a couple of crypto brokerages that have gone under. And so this opportunity is just absolutely huge. And then we got business banking, which is already launched, and then soon to launch SoFi Coach and SoFi Technology Solutions. So let's talk a little bit more about SoFi being a national bank charter. So it's direct regulation and oversight, meaning they're held to a higher standard, right? Built institutional trust, like I was talking about. Like they're the only crypto native, all the other crypto native firms, they lack it. And let's see, SoFi USD backed 1-to-1. So the trust issue again right here. So what's happening now is they've partnered with MasterCard, and you're going to use SoFi's stablecoin to be able to make payments and transactions all the time, right? So instead of just Monday through Friday, they'll be able to do it 24/7. So we can see here their MasterCard integration, global payment rails, allows SoFi USD to be spent anywhere MasterCard is spent. Huge deal. I don't think that many people realize how big of a deal this is. Banking is going this way. I've talked about it with, JP Morgan, at one point, Jamie Dimon, their CEO, the biggest banker in the world, was just crapping on, the blockchain technology and crypto, and he's changed his tune, and this is the way things are going with like money and the financial services to quicker and safer payments, and hopefully it becomes cheaper for all of us. So yeah, this is one of the major reasons I am investing in SoFi Technologies. So that's all I have for you guys. Stay tuned. If you guys want to see what the next move I'm making in my investing as well as my gambling portfolio, give me a subscribe so you can see what I'm doing. All right, I'll see you in the next one.